Silver is right now sitting at a crucial support, which I've mentioned in my previous forecast. Now, this week, tomorrow, we have CPI announcement. And moving forward on 17th of June, we have the US federal rate of interest announcement. So these two are the primary factors which will decide the direction for dollar index, and accordingly, commodities will take the direction. So let's dive deeper into the charts for silver. So let's start the chart analysis, and I'm working on silver futures chart here, not on the spot chart, and I am on the daily frame here. Now I want to apply the fib retracement on weekly basis first. So I need to check the levels of breakout. So we got the base here, and from here we got the next move higher. So this is perfect for applying Fibonacci retracement. So I'll be using the low here and connecting to the highest here. So on the basis of Feb retracement, right now it's hovering around 38.2% retracement level, and the next major one is at 50%. And we can also use a reverse Feb retracement to look at the extensions in the reverse order. So I'm going to delete the previous one. So it rallied above 161.8. So the move above 71.49 or 71.5 turned out to be a fake one. And the next crucial support is at 138.2, that is at 62.87. So let's highlight the next support zone here. That's it. And now we can remove the fib. Now let's move down to the lower time frame, that is daily. Now on the daily frame, I'll turn it back into candles. And we got the fake high above this yellow highlighted area, and then we got the crash. And the crash basically brings it back to the support zone. So the green band is acting as support. Now I'm going to apply here again a line chart, and on the basis of line chart we got the lower low formation with bullish divergence, but only on the histogram, not on MACD lines, which means it created a short-term bounce which failed to print a higher high, and then it created the next leg downwards. So I'm going to apply again a reverse retracement from low to high during this corrective move. So it will help us to identify the downward extension levels. So let's apply. And I'm connecting it on a candle basis. Now, right now, it is sitting at a crucial support zone, which I've mentioned in my previous video. That is the level of 65 here. So if 65 holds, then we will expect silver to bounce back to 72. So the first major resistance would be at 72, and the higher ones are 75, 79, followed by 83 and 85. So I'm going to highlight the zone between 14 to 23 as the crucial resistance band. That's it. And now let's move to 4-hourly frame. Now on the 4-hourly frame, again, if I change it to lines, you will see a clear bullish divergence is printed now. So this is the previous swing low here, and this is the new low, which is exactly into the support zone we have highlighted. So lower low formation comes with bullish divergence on MACD lines, and on the previous low it also formed bullish divergence on histogram. So which means that sellers are exhausted. Now in case buyers, they need the confirmation of the control of the market, then they need to break the level above 78.5 here, which is far from the current level. Now I'm not expecting any clear direction until FOMC announcement. So I'm going to apply a reverse retracement on this leg. So the best case scenario of the current leg, we will see retracement up to 61 or maybe 78 to 85. So 75 to 76 is going to act as major resistance. And then if it drops, it needs to hold above 68, 69, create a higher low formation to confirm the bullish breakout. And if it fails, then we will expect it to continue lower. Now, where is the next target? If it fails to hold here, then the next target sits around 61.98 to 63 here. So we need to understand after CPI announcement, based on the FOMC rate of interest and the Kevin Walsh first public speech, that how market is going to react. Until then, I'm expecting short-term bullish behavior, corrective, unless it breaks the structural level here. So trade cautiously. Now let's move to oil. So here I'll be using crude oil futures contract again, and I'm going to apply the monthly frame here. So on the monthly frame, going back to candles, so this is the previous high. So during US Iran escalation, we got the bump into this area and it acted as major resistance. And after that, after this spike, we did not see a follow through. Now switching to weekly frame here. Now on the weekly frame, again it turned into a false spike, a false breakout here. It did not sustain above this level, and since then it is continuously printing lower highs. So here we have high, lower high, and lower high, and this is the low in between, and here we have higher low. So if I move down to the lower time frame, I'll be able to apply the triangular boundaries here. So let's apply the triangular boundaries. So we are going to connect the lower highs from the top and higher lows from the bottom here. And inside this triangular formation, it is again printing a sequence of lower highs and lower lows. So this low, and now we have a new lower low. So we can apply fib extension in the downward direction. Number one, because the histogram is favoring sellers here, I'll be using again a candle chart to apply the extension to get the precise levels. I'll start from this high. I'll connect with the first low and lower high here. And then I'm going to repeat the same process with the next low and lower high here. And if I move down to 4H, I'll be able to repeat the same process on the 4-hourly frame as well. So let's apply the third extension in the downward direction here. So third extension in the downward direction added. We'll use a different color and move back to daily chart to see the magnet zones. Now the first major magnet is around 85 to 87 here, which is at the lower end of this triangular pattern. If this gets breached, then the next major support is at 78. And below, sorry, my bad, the next major support is at 82.51, and then we have at 78, and I'll be using retracement on this spike as well, connecting from the lowest to the highest. So the common target is this one, so which is very close to 61.8. So if we see a break below the triangular formation, retest of 91 as the major resistance, then I'm expecting it to continue to 79.45 or 78.15. This is the target. Now let's move to the next lower time frame, that is 4H. Now even on the 4-hourly frame, it is continuously printing lower highs, but this is still inside the triangular boundary, so we need a clear breakout, more inclined towards the bearish side. And moving to 1H again, so here we can see that it is printing the sequence of lower highs and lower lows. And now I'm expecting it will hit the triangular lower boundary, bounce back, retest, creates a new lower high. It should remain below 95 and then continue lower. So this is the short-term plan for trading crude oil and silver, and I'll be back tomorrow with my midweek gold analysis.